Both TCS and Infosys are due to report. Numbers come out, of course, after market hours. And Reema is now on the wall to help us prepare for this. Reema, now you've been telling us over the past couple of days that it's going to be a weak quarter for the sector as a whole. Specifically, give us some details on TCS to begin with as well.
Well, absolutely. So Q3 is going to be weak for the entire tech industry. One, because the macro environment continues to be weak. And this quarter, you are likely to see higher furloughs than usual. So there are 6 listed IT companies, and 4 of them are likely to report a revenue decline on a quarter-on-quarter basis. And these are the numbers, all except HCL Tech, which gets the benefit of seasonality, a positive seasonality in its products business, one acquisition and a ramp-up of a deal called Verizon. Now, coming specifically to TCS, dollar revenue growth seen down 0.2%, but constant currency growth is seen flattish. In fact, growth for TCS has been flat over the last 2 quarters, and this would be the 3rd quarter of a flat top-line performance. Margins too for the company have been very, flattish and stable between the 24.5 mark. Now, with TCS, the key to track will be their commentary. It doesn't give you an annual guidance, but it's the bellwether for the industry. So what they say on their CY24 budgets, the improvement in macro, if any, will be tracked closely by the street.
Okay, that's TCS. Infosys, Reema, Infosys has had such a dull year, right? And your numbers are saying that perhaps even in this quarter, we will see a fall in top-line growth?
Absolutely, and there is a possibility that Infy's guidance is cut for the 3rd time in a row. And this year. So the current guidance is 1 to 2.5% constant currency revenue growth, the top line growth. And there is a possibility that the upper end of the guidance comes down from 2.5% to 2%. So 1 to 2% would be the revenue forecast for this year according to consensus, 3rd consecutive quarter, and they'd begun the year in April with a 4 to 7% guidance. What will the street track? Well, 1 will be continued senior management exits and how it's impacting business. And 2, the reason for the cancellation of a large $1.5 billion MOU. In terms of pure numbers, revenues to decline 1.8% on a sequential basis, margins to come down quarter on quarter because of a wage hike. That said, despite poor numbers, the stock has seen upgrades going into the results. So last week, JP Morgan and UBS both upgraded the stock. Their target price is at 1,800. Jefferies maintained their buy rating, but they had raised the target price on Infosys to 1,720.
Oh, yes, absolutely. That's another issue that, thank you, Reema, so much for that.